Hello to all of you. Well, welcome to this webinar. It's wonderful to have people from all over the world. Roger, it's wonderful to have you online. I think you're in Singapore at the moment, so it's quite late there already in the evening, but wonderful to have you online.
Good to be here.
So I just want to explain a little bit to some of the people, that haven't heard of who you are, which I think is quite important. So I did put this in the webinar description and also in the emails, but Roger's originally from Hong Kong. He's Singapore-based. He actually went to Cambridge University. He wrote a best-selling New York Times best-selling book called The Millionaire Master Plan. He has written a number of other books like Wink, etc. In terms of what he would describe himself as an educator, a social entrepreneur, and a futurist. I've worked with Roger for over 7 years, and what I love about him is that through the mentoring that I've done with him, is that in my mind he compresses time. So what I mean by that is that every month he's looking around the world, what's happening, and he brings sort of the top trends. And he was the one that got me to write my own book, Property Going Global. He was the one that introduced me to crowdfunding and really about growing a business. The other thing that's really important for those of you that are entrepreneurial, he also created Wealth Dynamics. Now, for me, having been an entrepreneur since 2004, I found a huge amount of pain in trying to be an entrepreneur. I always wanted to work harder, and I'd read books like E-Myth, which were all about systemizing, and it just didn't work for me, basically. I was always trying to sort of be something I wasn't. And, I loved this concept that Roger created in terms of Wealth Dynamics. There's 8 different profiles, and, maybe later we can go into it in a bit more detail. But the most important thing that I found was that it allowed you to celebrate who you are as an individual and then build a team based on other people that love doing what they're doing. And, really, I'd highly recommend any entrepreneur to really understand and study Wealth Dynamics in terms of where it's in. It's also built on the I Ching. It's sort of over 5,000 years worth of knowledge in terms of China and India and all some of the ancient wisdom that's out there. And what Roger's done very cleverly is he's married together East and West to really allow people to be able to participate and to understand. And then the last part is that he leads the entrepreneur movement. There's over 2 million entrepreneurs around the world that actually follow the movement. On their Genius U platform, they've got over 800,000 entrepreneurs signed up. And they have a number of events around the world. Now, I'm going to talk about this a little bit later, but they've actually got an event coming up in Johannesburg, South Africa, on the 1st and 2nd of December. We will talk about this later and what people can get out of it. But, I just came from the one in London, actually, which was in September. And I know that you had one in Brisbane in June, et cetera, et cetera. And, certainly for me, from an entrepreneurial perspective, everyone that I've recommended to go along to this gets tremendous value in terms of where we're at. So, Roger, just a quick one. Anything I missed out which summarizes yourself better in terms of what I've put together? I just wanted to give everyone a quick intro to you.
Well, I think it's definitely worth mentioning as well that, as well as really supporting entrepreneurs, that there are a number of different events or programs that we're actually running that actually link in with Wealth Migrate as well. So, for example, one of the companies, Entrepreneur Resorts, which is growing resorts and beach clubs around the world for entrepreneurs, that we actually listed. We IPO'd the company. We listed on the Seychelles Stock Exchange, really through the advice of you and your team, and we use Wealth Migrate to do it. So, like coming from the place where, everything that we're doing is not just to support companies, but actually at the same time, we're using all the best tools that we can find as well. And it was through Wealth Migrate we could do that. And I'm about to fly tomorrow to Thailand. We're about to go out and get our next resort and beach club as well. So this is all kind of like happening in real time.
Yeah, no, it's really exciting. I remember when I sat with you in Bali in 2014, you were talking about the fact that you wanted 5 of these entrepreneur resorts around the world, including 50 beach clubs. And, we're going to talk about it today in terms of the way trends are changing in terms of working habits and entrepreneurs and everything else. And, our attitude in terms of Wealth Migrate is that we want to be able to allow people to participate in owning the property, while you guys are running the establishment effectively in terms of that process. Just to summarize for those of you, and we've got over 300 people that have booked and have joined us on this webinar. And just to, for everyone that doesn't know who Wealth Migrate is, just a very quick summary. And again, this is something that I've worked on for many years with Roger. But as investors, we've got problems around the world, particularly in terms of middle-class investors. We generally are stuck in country, which means we've got challenges around currency. We've got economic challenges like Brexit, and we've got diversification risks. Once we want to go cross-border, it's extremely difficult. There's high barriers to entry, And that's if you're looking at residential. If you want to go into commercial, it's even more difficult. And then once you go overseas, things like banking, legal, tax, compliance just make it really, really difficult. And that's why the 99% don't get to invest like the top 1%. Why they should be investing? Well, 49% of the world's wealth is actually held in property, and yet only 12.9% of the world's population actually has access to that property. And of that 12.9% in the Western world, in England, Australia, and America, less than 1% of people actually retire wealthy. Now, to go a little bit deeper there, 94% of people are going to retire broke, and only 5% of people are going to retire feeling trapped. So it's not a great scenario. And really, we're looking to change that. We're looking to bridge that wealth gap and to allow the 99% to be able to invest like the top 1% using technology and smart investing. We decided to ask ourselves a simple question. How could we make global real estate investing easy? And, with the likes of mentorship that Roger's offered me and the team, is that we've now got a platform where people can literally invest in minutes. They can get access to the best partners and the best opportunities. They can invest from $1,000, and our version 5 is going live on the 30th of November, where it'll actually be down to $100. And no longer is it about hassle, management, maintenance, tax, compliance. It's really just about being able to focus on the best returns. And when one wants to understand the business model, well, you've got the best local suppliers. So in England, Australia, America, South Africa, the best local suppliers get access to global investors, and global investors get access to the best local suppliers through a trusted global real estate marketplace. And before I go into asking Roger the very first question, I think there's clearly demand for this. We've got members in 118 countries. We've done over $500 million in real estate deals. We've actually had about $79 million go through the platform. One of the things I'm proudest of is that even though for the team we've won a lot of awards, we've got a higher than 70% reinvestment rate in the platform, which really is quite exciting for me in terms of fulfilling investors' needs, not just once, but on multiple occasions. So that just gives you an overview of who we are and where we come from. I really wanted to ask you the first question, Roger, because you spoke a lot about this on a coaching call we had about a month or two ago, where there's a lot of people in the world talking about the impending economic disruption and what is going to happen over the next, it might be 12 months, next, 2 years, etc. You spoke about Ray Dalio. I've had the privilege of having lunch with this guy, Jim Rogers, who wrote Investment Biker twice. He also talks about the cycles. Tell us a little bit about your thoughts, and also if you want me to share screens with you, let me know. But your thoughts on sort of where you see the world economy going over the next couple of years.
Yeah, so I think it's actually been a few years coming, right? Like, I mean, generally we've always had a cycle of boom and bust that's, normally 7 to 8 years apart. And, if we actually go back all the way through 1980s, 1990s, it was following that kind of a pattern. And even into the 2000s, right? 2002 was the dot-com boom and then the bust. And then we had, global financial crisis, 2008. So we're now like a good 10 years on, right, from that last real major correction. And everyone knows it's overdue, and the reason it hasn't actually happened yet is largely just as the result of the number of governments, especially the US, that's just been printing money, right? So as a result, it's just kind of cushioning what's going to be a much larger crash. And it was about a month ago that there was more and more and more news about this. Actually, it happened just before the major shifts that have been happening in the market in the last month, when we've seen, third biggest drop in the Dow in history. We've seen higher volatility over the last month than we've seen in several years, and where the likes of someone like Ray Dalio, who called the last crisis, was saying this one's going to be a lot worse. You've got the likes of Pawson, Bernanke, the guys that were around 10 years ago, who also have been doing op-eds in New York Times, sharing their same view that we are in for like what is going to be a pretty major correction that's going to happen. And the bottom line is no one knows when it's going to happen. It could be next week, it could be next month, it could be next year, but it's going to happen, right? Everyone knows that. And so the real key thing is how to make sure that you are in a position where you're not just hedging against capital risk, whether that's in property or whether that's in shares in the stock market or any other capital, but also currency risk, because we have got more and more of a risk that if you have all your money sitting in your national currency, then you also are at high risk as well. So the ability at this point to be diversifying into different asset classes and at the same time into different currencies is critical. I mean, it really is. And all the people that I know that are working globally are ensuring that they're actually sharing that across the board, and at the same time realizing that we are going to see much more this time round than just the destruction of several banks or institutions. I mean, this could be impacting governments themselves at a much higher level as well. So just knowing all this disruption is coming our way and being mindful of that, there's a lot of companies out there that are looking for much smarter ways to really ensure that they've got liquidity on their assets, which is obviously one of the things that you're doing with Wealth Migrate, or offering people the opportunity to have with Wealth Migrate as well.
So tell me, Roger, I mean, knowing that this is coming and sort of following trends, and you've always been very good at this over the years I've known you. What would you recommend to the people on this webinar and those that are listening to the recording to sort of pre-plan? When one considers Uber was built during the last crash, Airbnb was built during the last crash. Often, sometimes when there's massive challenges, is equally when great new companies are built because of necessity. What do you think people should be looking at? I mean, okay, diversification across currencies and asset classes. What else is important to be looking at?
Well, I mean, the biggest thing whenever there's a situation like this is always about cash being king, right? I mean, like, this is exactly what happened also back in 2002, is that anything that was cash generating, if you actually had a share of that, then the cash continues at times when asset prices are even dropping. And so what's really super important, of course, the people that actually have negative cash flows, they're the ones that are first to go. So if you've got a high cost of money and at the same time you've got negative cash flow, if you're in negative equity, negative cash flow is, of course, you're going to be the one that loses all your assets. Whereas if someone is in negative equity but has got positive cash flow, they're still going to be able to weather it, right? So it's always about the cash. And in fact, if you think of what happened back in 2002, where we had at that point a whole bunch of overcapitalized companies like AOL and the tech space. There were companies like Yahoo that today, like, there were companies at the beginning who were even the first to get into like the online commerce side before Amazon did. And those companies have all disappeared now. So there's a big shift that goes from the first mover advantage to the last mover advantage. Like, as Peter Thiel says, in chess, the winner is not the one who makes the first move, the winner is the one who makes the last move, right? So it's actually saying, okay, well, who are the last movers? They're the ones who have sustainability in their business model, where they're actually able to create cash flow as they're actually generating those as well. So that's the key to it. And anyone who's currently like just depending on the asset base without actually looking at what is the IRR they're getting from a cash point of view, are going to be the ones that kind of lose out, which is really important. Plus, also in business, it's not just like the assets that you own, whatever businesses that you're running or that you're invested in, making sure that they're cash generating and that they're fundamentally recession proof, that they're not reliant on the good times in order for people to be buying from them. And so like Ray Dalio does that really well, where he talks about having counter cyclical stocks, where for example, in something like education, right, or which always goes up when people realize that they got to go out and learn new things because what was working is no longer working. That's generally counter-cyclical, where more people invest in that than beforehand. Obviously, anything to do with credit or finance services goes up when people actually are tight on money. So these are all the kind of things that you can be looking at and saying, well, what are the things that either are cycle-proof, because people need them anyway, people are still going to eat, people are still going to educate, or what are the things that actually are going to increase when times are tough, and make sure that you're actually keeping an eye out for those and not expecting to just get crazy like capital returns, but that cash returns become much more important.
And where do you see, in terms of, particularly as there's more uncertainty in the stock market, do you see a move of capital from the stock market to more protected assets? As an example, property, real estate that is getting a cash on cash return on a monthly or quarterly basis. Do you see people actually moving from the stock market to, and I'm not saying only property, but those type of asset classes?
Yes, and I think that is happening. I mean, whereas over the last couple of disruptions, the only way to really get access to the best deals was that you really had to either be a sophisticated investor already, where you could actually have the banks actually redirect the money, or that you were just in the know and knew where to go for those. We're living in a very different world today, where any individual investor can go out and find the smartest things that are actually in the market right now as well. And I think that's that. I mean, I think that's kind of interesting. I'll give you an example. And in fact, if I share my screen, I can share a few kind of just thoughts and ideas around what is happening at the moment, and the shifts that are actually happening out there as well. Let me see. What's the way I can share my screen? I'm just checking.
No, I've given it to you.
Okay. All right. Okay. So can you see my screen? Okay. Is that working?
Yeah, it says top stories. Yeah.
Okay. Okay, so anyway, anyone who's out looking for what's going on, right, is like there's so much that's actually out there on the markets already, that you can actually see, and everyone's really pretty much saying the same things that are out there as well, right? So that's happening out there at the moment. But while you've actually got that happening, this happened just 2 weeks ago, or 2 weeks ago, 3 weeks ago. This is October, so 1 month ago, right? So this was Saudi investing $45 billion in SoftBank, when they invested $45 billion the year before. So that's $90 billion they've actually invested in. SoftBank, run by Masayoshi Son, who's like number one deal maker in the world right now in Japan. He has been really focused at investing in companies which, from his point of view, are future-proof. Right? These are the companies that are fast-growing. And the reason that Saudi invested this additional $45 billion was because the first $45 billion has already 10 times this investment within 1 year, and that's pretty phenomenal of growth. But it's as a result of the kind of investments that Masayoshi Son is actually making. And for him, it's on specific types of technology companies, which are these companies here, right? This is actually showing the actual investments that he's made. And you can see them here, Uber, NVIDIA, WeWork, Flipkart. These all have got a number of things in common. The first thing they have in common is they're the next stage of what's going on with the internet. So if we go back to the very first stage, which happened really like 30 years ago, right, around 2008, or really kicked off around 1998, started around 1995 and then kind of moved towards 1998. And that was the age of the desktop base. So from desktop, it was about digital, which meant the only way to get anything was to go online, and it was static. So most of them were kind of gray pages where you would go online and you'd be able to just go visit a website, right? The search engines were just getting started. And most of the time, you're just going and trying to look for a site, type in a URL, and then go and have a look at what they had to share. There was no social media, there was no social sharing, none of that stuff existed. And for 10 years, the companies that dominated that space, that were pretty much selling access, that was the likes of AOL, CompuServe, the companies out there that became the biggest companies, and even the very beginning of social media, right? When it first kicks off, it wasn't the likes of Facebook, right? It was like MySpace. At that point, those kind of companies, which was all very static, all those companies had disappeared, and they actually started disrupting after the dot-com bust had happened. And then around about exactly 10 years later, around about 2005, YouTube started in 2005. Facebook started just a year after. From 2005 to 2008, all of the second phase of the internet all kicked off, and it was all mobile. That was when the iPhone came out for the first time. So at that point, no one was thinking that suddenly we'd be moving from desktop to mobile. Today, over 70-80% of all internet traffic is on mobile. And so it was mobile-based instead of desktop-based. It wasn't static anymore. It was now social, right? It was all about everyone connecting up with each other. And it was now the likes of Facebook, the likes of YouTube. The companies that today are the really big companies like Google, they're the ones that 10 years later are the ones that are dominating. But that does not mean they're going to dominate over the next 10 years. So we just about 3 years ago started seeing the beginnings of what is really the digital layer. So the difference of the digital layer is digital in itself means that you're actually looking at all the online side at the expense of offline. So everyone complaining about millennials spending all their time looking at the phone, the amount of screen time that you're having, like all that kind of stuff will disappear in the next 10 years, because the digital layer is about actually using the internet not as a distraction from reality, but as an enhancement of reality. Something like Uber is not about spending time just sitting on the Uber app. It's using the Uber app just to enhance your real-time experience of actually getting in a car, right? Like WeWork, right? It's about having an app and having a platform that allows you to enhance your experience of actually going to work. Flipkart is basically the India version of Amazon. is using it to actually buy things that then get delivered to you in real time. So these are all basically offline on, O2Os are offline to online products, which are basically where everything is about having a tool that allows you to then actually enhance your experience offline. And some of the biggest tools are the ones that are going to be happening around enterprise or around investments. Like, for example, in property, where there are some massive shifts that are currently happening in real estate, which Migrate is actually involved in as well. But they're happening in real time. Like 2 examples of that happening right now. Like I just opened like 2 things that showed up within the last week. This basically is an article which is around the Australian state, of New South Wales, where they are going to be putting all of their property registers, all property transactions from July the 1st are all going to be on the blockchain, right? It's like Dubai's already done it, right? Like there's already countries around the world that are fully on the blockchain. And this is where then the actual sites or the platforms that are then able to then divide up those property transactions and then split them into multiple and crowdfund or effectively turn the entire property industry into what now is like E-Trade and so on. This is all happening in real time today. This here happened like within the last 24 hours. Manhattan real estate worth 36 million tokenized and sold to investors, where already we're actually seeing what was once quite difficult to access and get to, which are basically large property transactions, are now getting divided up and effectively treated like currency, or at least like securities. And so all of this that's happening at the moment comes back to the kind of companies that are going to be the ones that are going to be the biggest growing over the next decade, which are going to be the ones that are finding ways to build liquidity off the capital markets the way they are at the moment, or liquidity of assets, whether it's like Uber or Airbnb, that are basically taking assets and then making them far more accessible for anyone to actually be able to utilize and use as well. And that's really going to change everything over these next 10 years in a way that most people really haven't appreciated yet. And there's no question that in 10 years' time, we won't even be talking about the likes of Facebook and Google anymore. Even though today it's difficult to imagine that, in the same way that 10 years ago, it would have been difficult to imagine that AOL would end up pretty much ceasing to exist, right? So anyway, that's just sharing a little bit, which hopefully is kind of open the eyes of some who are listening to the fact that we kind of think that the internet and everything has kind of got to a certain level of maturity without realizing we're just at the beginning of the next big wave. And this next wave is going to be far bigger than the first 2 waves of the internet that have just taken place. Anyway, I'll stop sharing my screen for now, just off the back of that.
Talk to us a little bit around, I mean, you've already mentioned, the blockchain and fintech, etc. What about the disruption that you see happening within the, I'm going to call it the financial industry, basically, around sort of fintech, blockchain? I've just put an article up here where it said the 9 industries that will be disrupted the most were banking and real estate, number 1 and 2. But if you look at, from your experience, I mean, you've just shared quite a lot there in terms of trends and themes. But specifically in the financial industry, what do you see happening with the emergence of fintech and blockchain?
Well, what we've seen with the likes of, let's say, let's take media as an example, right? And what's happened in media, and I just saw the news just today that Fortune just got bought by a Thai billionaire, right? Like all of the what we thought were untouchables in media have all dropped and become almost irrelevant. And now it's really just the branding of what they are that someone's going in and buying up for pennies, effectively, compared to what they used to be worth. So how did that happen? And it happened as a result of media no longer being a channel which you could only access, like getting to the news or getting to the most important information, that you could only access by physically buying a magazine or a newspaper, or even just watching a TV channel. Where that was controlled and it was owned. And fundamentally, that's what happens when you have a distributed trust model take over from what was a centralized trust model. So media was a centralized trust model where effectively the TV stations and the media companies were the middlemen. When it was possible for anyone to go out and get any news or any information from wherever they wanted, and they actually then trusted the information that they were getting elsewhere, and it was easier for them to get to it, and they could get to what was most relevant to them, then why would you go to a middleman to actually get that information? That made no sense anymore, especially when it's freely available. So that whole aspect of what happens when trust gets distributed across the board on something that is easy to access, like media, that's going to happen now to the financial industry. And the reason for that, and the only reason the financial industry had not followed along in the same way as the media side, was really simply because of the really the double counting conundrum, right? Like you can have, I can have a photo, I can share the photo of you. We both now have the photo, no problem, right? And then our photo can be like distributed like a million times. If I have $1, I share the dollar of you. It's not like we both have $1 and we can share that a million times. So there's some things that you cannot just share freely without it actually diminishing in value. But blockchain actually solves that problem, where actually now it is possible for us to actually be able to track trust as it goes and know that something is verified as like the original, and it can't just be simply copied. And so that's what blockchain has enabled. And off the back of that, it means that in exactly the same with the media industry, where we can just go to anyone to trade anything. This is already happening, by the way, when it comes to, let's say, for example, transactions, like the fact that you've got companies out there like Stripe, like PayPal themselves, where anyone now can effectively be the merchant, right? I can take my mobile phone, I can get my little swipe card, I can come to you, and basically I can take a payment from you. And I don't need to be going to a bank to get that money. I don't need to go through any other middleman. Now, the fact that you've still got someone in the middle of that transaction, which happens to be Visa or happens to be MasterCard, that basically is verifying that middleman goes away as well the moment that I can just basically come to you and just immediately just swipe digital currency with you, and there is no middleman necessary for that to happen. So what that then means is we're going to see the likes of HSBC or the likes of Lloyd's Bank that are going to be, again, sold for a fraction of what they're worth today in the future, just because someone wants to have the kudos of owning that brand. But they themselves are going to lose the ability to be the middleman, because why go to the bank and have them verify a transaction which already is being verified across the internet without you needing that? And so we're going to see pretty much the disruption at a very large scale of the entire finance industries, and all those large banks are going to go the same way that the media companies went over the last 10 years. And this is all going to happen within the next 10 years. So that disruption, first of all, of the traditional model is no question not just going to happen, it's already starting. The second aspect that then comes off the back of that is, as that takes place, then you've got to basically ask the question of what do governments do in the middle of all of this, given that right now governments control the entire financial system through the banks and through financial lending, and they actually also are able to have full control to make sure they collect the taxes. And we all know that governments right now, like compared to what they were 100 years ago, an entirely different beast in terms of how much they collect in taxes and what a massive control of the electorate they are in terms of actually taking that cash. But to give you a little view of the future and what that could look like in the future, if you take certain governments that already know that they aren't in a position to be able to hold on to all the controls on their citizens to make sure they've got enough money to survive, like, are there examples of that already out there? Because if we know that banks are going to be either collapsing or at least massively disrupting, what will happen to governments, and how does that impact us in terms of regulations, in terms of our ability to invest in different countries? The best way to look at it is to look at countries like Singapore or countries like Dubai. So these are countries that really don't have any of their own assets. So what they've done is a very, very different thing from most of the rest of the world. If you go to America, if you go to the UK, even South Africa, what you'll find is that generally the government will treat their citizens as employees, which means they're looking at their citizens as people that are working hard so that they can then basically get taxed either through their business or through their income tax. And then that's how the government actually survives. In Singapore and Dubai, like Dubai has minimal and in fact zero income tax. Singapore is down to like 14%, but they actually have so much in terms of additional benefits for people. It actually drops to under 10% as the actual rate, and there's zero capital gains tax. So how do they actually make money? And the way they do it is not by treating their citizens as employees. They treat their citizens as customers. And so it's a very different thing. They say, if we can actually create a good enough experience for people to come here and spend their money, in fact, we'll bring visitors in to spend money as well. So like Singapore has 5.5 million people, but it has over 20 million visitors. And so they'll make so much money by actually being a place for people to come as a customer. And then effectively, they're doing the same as what a company would do, which is actually make money by actually having customers as opposed to make money by basically trying to just take percentage from the employees. And that's going to be a shift in the model, which will happen pretty much at the city level all over the world. It will happen in cities more than it happens in countries, but it may be that nations themselves then actually have to rethink the way they operate, or even the size of government that we have at the national level. They'll have to, because they won't have enough tax to survive. And we'll probably see some bankrupt governments before that happens too. So that all links back in to this whole fintech blockchain side, which is all part of the same thing that I'm saying is going to be this massive disruption, which is not will it happen? It's 100% going to happen. It's just when it happens, right? And the pace at which it happens, where some people think it will take a while, others think it will happen very, very quickly. And of course, it's just a matter of each of us being aware that if we're not thinking globally right now, and we're not thinking about the risk that might be involved in just having our own government fundamentally collapse on itself potentially, and what does that mean in terms of what assets we hold or where our money happens to be, the more we think globally right now, the more secure we're going to be as we move into this new future, and the more we'll be able to actually harness not just security, but also profits or potential opportunity by actually being there when those opportunities arise as well.
Yeah, look, I mean, that's just one comment there where you spoke about middlemen. You know, the average property transaction has 16 different middlemen at the moment. So it really is right for, you know, for that disruption you speak of. You know, this slide you've actually sort of to some extent you've actually answered already. And if I look at three major comments you made around the Vision Fund, really, you know, when one's looking at the unicorns over the next 10 years and this next big trend you're talking about, you spoke about the digital layer and enhancing reality. You spoke about offline to online, and you also spoke about the massive change in terms of liquidity, in terms of capital markets and assets. Is there anything else that you would add in terms of, you know, people that are trying to spot these big trends and what the Vision Fund are doing, etc., you know, in terms of, you know, the next 10 years?
Yes, very much so. If I maybe shared my screen again, I'll show you a kind of an interesting slide here, which I'm sure some of you may have seen already, but I'm going to show it anyway.
Let me just pull it up. Give me 2 seconds. I'm just giving you back the. Where's Penny gone? There we are.
Penny.
Just
yes,
for
my name is
anyone
Penny
who's a
today.
bit confused, Penny and Roger work together, and he's on Penny's laptop. So.
Okay, so this here, it's an image of all of the unicorns that have actually become unicorns. You know, this is as of the end of 2017, so there's actually more now as well. And there is just this massive like growth of companies in China that are now starting to actually grow around the world, and the entire Southeast Asian region is also growing as well. So I just came off the back of a 3-day workshop we had with a whole bunch of fast, high growth tech companies that were anywhere from like, you know, $20 million to $200 million in size in the Southeast Asian region. And we were basically showing them how to scale, how to go to the next level. And it was all around like the capital raising, but largely around scaling a team, because there's so much money that's out there at the moment. And what's really interesting is like all these guys here, these are all people, these are all companies that have actually grown up as unicorns in China. And there was someone who I actually spent some time with just last weekend. His name's Patrick Grove. He's worth about $500 million, and he has like listed about I think it's about 7 companies on the stock market off the back of tech startups. And what he used to do is he used to go to the US, find the best ideas from the US and bring them out to Southeast Asia. He says that basically now pretty much all the best ideas are already been applied. And he was even go to China to see how China was taking things from the US and actually then also effectively copying them or making them better as well. And he says that over the last year, there's been this massive shift where effectively China's realized, or the Chinese entrepreneurs have realized, we're pretty much copied everything that's good out there. Now we've got to innovate. So now they're coming up with their own ideas of basically new models that are able to scale even faster. And so there is one of the biggest trends that is happening out there at the moment, which is the massive growth in new business models that are actually coming out of the Asian region, where Asia for sure has overtaken the West already and is continuing to now grow at this like pretty incredible pace. Where if anyone who is listening in from Europe, or if listening in from Africa, knowing that you've got to be looking east instead of west now, and that the actual models that are coming out and that can be replicated, or that even like opportunities for partnership, they're all coming out from this region now, is really important. And it's only a matter of time before, like, just to give you an idea of it, right? Like when we when we started our something called C Founders, which is Southeast Asian Founders, which basically brings all the top tech companies together from Singapore, Malaysia, Thailand, Indonesia, Philippines, like all these different places. When we started, there were no unicorns. Now you can see there's a number of unicorns, right? Like we've got like over a dozen of them that have all launched, and then the number of $100 million companies and the number of $10 million like are so many now in a way they just simply weren't there 4 years ago. The speed of growth of these new scaled companies is so rapid that we're going to see this happen in Africa as well. For example, we're going to see it happen in parts of the world where effectively America gets sidelined because it just doesn't have the same rate of innovation that's taking place on the rest of the world at the moment, and too much regulation, so it makes it even doubly difficult. And plus, obviously there's all the tax issues and everything else that's taking place, plus all the political issues that they have. And so we're seeing this massive shift that's happening. Right now, I'm actually making this call from Suntec City. Suntec City is right now where the ASEAN summit is happening. So like as I'm up here talking to you, like Vladimir Putin is downstairs. We've got like the president of Japan here, of Singapore here, of like all the guys all around his region are all here in Singapore, same place as I am. Just I'm a little higher up than they are. They're down there somewhere, and all of them are basically looking at the growth area, and they're saying already with the entire Southeast Asian region is effectively like the 5th largest economy in the world. You take into account all of Asia, and we now have got basically now a huge powerhouse which is fueling the next tech growth already. Like where is the number one innovation happening for solar power and green energy? That's in China. Where is the number one like base for all of robotics? That's in Japan, right? So we're seeing all these different areas of growth that I was talking about earlier. It's not just that they're actually new areas, it's that they're all being born out of the Asian region instead of out of the Western region as well. So I just want to add that as like an extra piece, because a lot of people miss that. Even though it's happening, they're still going to the wrong place to see or to get their news or to see what the models actually are as well.
So it's a good thing that we've got an office in Shanghai with our Wealth Migrate China team.
And the scale is just incredible, as you know. I mean, it's like the number of people that are actually just getting becoming entrepreneurs as well, and the speed of it. When you've got 1 billion people in your country, it really changes the scale.
No, 100%. My last question, Roger, is that something you started talking about actually 2 years ago when you invited me to the Impact Investors out of Tau, before you actually bought it, was the democratization of capital. And you've spoken about the Big Bang, and I really would like you to just share a little bit about it, because if you look here, back in 1965, the average stock was held for about 6 years. Generally now it's actually held for 22 seconds. So 1965, sort of 6 years, and it was very local. I mean, it was sort of unheard of for someone in, I don't know, England to even invest in America, let alone South Africa or Southeast Asia. And now it's sort of with the high frequency trading, it's happening almost in milliseconds, and it's global. And then came along E-Trade in 1982. And they've got revenues now of sort of anywhere between $2.5 billion to $3 billion a year. They're worth about $13 billion. And what I find fascinating is that they talk about how they've made it really easy for all the investors around the world. Now, you've spoken quite a lot around how that's sort of going to happen in property, and the current stats in property are in America are 8.7 years. And I tend to sort of joke with people, well, whether it's us or someone else, someone is going to disrupt the property market. But talk to us just a little bit about the Big Bang. You spoke on our coaching call 2 months ago around how it was the biggest transfer of wealth, generational transfer of wealth over the last 40 years, and how you see it coming to other asset classes, not just the stock market.
Yeah. So the Big Bang basically happened 1986, right? So that was like when it started with the London Stock Exchange, where basically like you remember the old-fashioned days when everyone had open outcry, right? Everyone had to physically show up, to actually kind of like shout out that they wanted to buy or sell a share at a particular price, and so if you wanted to actually buy any share in any stock market at that point, you had to have a broker on the trading floor in that stock market. You couldn't like just trade at the same time something from London Stock Exchange, something from New York Stock Exchange, something from NASDAQ. You had to do them all separately, and you had to have your person on the ground, and you had to wait to basically see if you actually were successful at buying at your price or not. So I mean, to be honest, like even then, that was still easier than buying a property today, but it was still a whole lot more difficult than what happened after the Big Bang. And Big Bang was when then it shifted, and suddenly you didn't have to have that person on the actual stock market floor. You could actually just go and use your online trading and go online and actually then trade from there. And that shift, even though at the time it didn't seem like that big a deal, and you could even argue that some people say, oh, that feels more difficult because I actually kind of like just being able to phone up my broker and actually say buy or sell something. Now I'm going to go and do some work myself to actually put this in there. What actually happened, of course, is once people realize, wait, I can actually put in any buy or sell order and actually see how it's actually doing on my system. And then when that then became global, where then I could actually have my my shares in UK companies, my shares in US companies, my shares in like Israeli companies, whatever it is that I wanted, I could have them all in one place and have a global portfolio. That's when everything changed in terms of our own mindset about global companies. It changed the companies themselves because those companies then actually had the ability to go out and think globally. But it also, at the same time, it changed investors because it allowed investors to immediately have a global outlook. And more importantly, it allowed a number of companies, like you mentioned, E-Trade, probably the best example is Bloomberg, right? Which basically then actually started off the back of this to say, well, now that we've got all these people out there trading, not just the actual professionals in the market, but actually individuals at home as well, let's go out there and provide the news, let's provide the education, and at the same time, let's actually provide the tools that allows anyone to go out and buy any share in any company anywhere. And now, of course, anyone can go do that. Whereas if we really think about it, it's actually only been since the early 90s, which is really only 20 years that we've even had the ability to do that. And now look at how the world has changed. So what's really interesting about the entire property market is it's more ripe for disruption than even the listed companies were, because listed companies already had the ability, to actually take on multiple shareholders in a way that most properties don't. So it's already more ripe for this. It's far more difficult to actually have a property under your name and to be able to buy and sell it. And there's very little liquidity on that as well, unless you're kind of doing something, like a REIT, which is basically not even necessarily the property itself, but just the fund behind it. But once you've actually got the same principles taking place in property, where because of what's happening in blockchain, which makes it easy for you to actually divide a property and into multiple parts, just like we were just saying, then to actually be able to have them listed in a way which allows you to actually see what your shares look like, have your own dashboard, and then have that globally as well. Again, it's just inevitable. It's a matter of time for that to happen, or when that happens by. But when that happens, it means that anyone can be able to invest in a property or any property they want to be a part of in the same way as anyone who is investing in the stock market. And more importantly, it allows anyone who's actually looking for capital to be able to actually go out and invest in property or buy their own house even, and to be able to get support from others to actually help them fund that house in a way that has just never been possible before. So that liquidity into the market that happened with the Big Bang that then led to global market trading all electronically, that's all going to be happening in the same way with property markets. I think it's only a matter of time before some of the stock markets actually decide that they're going to start, actually listing property assets on there as separate exchanges potentially. But it's most likely going to be that there's going to be a number of platforms that will be the first to actually really take up the space and grow into billion-dollar businesses off the back of this as well. And it'll be the ones that are more global to begin with, like the E-Trades, that will be growing the fastest. So that's pretty much what's going to be happening for sure. And I think it's a really interesting parallel to what happened to stocks and shares as to what's going to be happening in the property market.
Awesome. I want to just share some slides there quickly and then talk a little bit about your event on the 1st and 2nd of December. You spoke about global, and it's quite interesting because there's about 250 platforms that we're aware of around the world. And yet, when we started out, and again, through a lot of assistance from yourself, we decided to focus on being global. So not having just in-country platforms, but having one global solution. I tend to say to people, when you catch an Uber, the last thing you want to do is be on multiple apps in multiple countries. It's even worse if you're trying to run an investment portfolio. And that's really why we started out to be the global real estate marketplace. We've now got members in 118 countries. We've actually got investors from 59 countries. I found that quite interesting because we've only spent marketing money in South Africa and China, and yet 57 other countries, people have taken their money out to invest in terms of the opportunity. You also spoke earlier about the different varieties. This is your Tau game reserve that we had 228 investors from 20 different countries invest just short of $4 million to be able to invest in a Big Five game reserve. And now, obviously, you've got the Thailand resort coming on. It's already got the Bali resort plus the 50 beach clubs. So on the one parallel, on the one side, you've got that. And then on the other side, you've got, medical buildings, which are all about cash on cash return and, very stable and not very sexy, but very good for resistance. Tell us just very quickly, Roger, in terms of the way things are changing around the world in terms of working. Why are these entrepreneurial resorts becoming so popular? You spoke about WeWork earlier, but it's also a trend. It's not just about investing in property or real estate, but it's also about investing in long-term trends of where they're going.
Well, I mean, first of all, like our whole premise of our entrepreneur resorts is that when you get as interested in models as we are, there's always a better model, and sometimes it's just a very simple kind of shift in the model. So what we do with the entrepreneur resorts is we know that many entrepreneurs already, and we can see it with people in co-working and so on, they already go to accelerator programs, already like investing in their own learning, but often, they're doing it without having a very clear, defined training budget, because entrepreneurs don't necessarily put a training budget into their plans as they grow, but they know they need to learn. Whereas everyone has a travel budget, right? So what we've done with the entrepreneur resorts is to say, okay, well, we want people to go and learn, but rather than them learning just in their co-working space or, in the middle of a city somewhere, let's take their travel money and let's actually get them away from where they're at and have a tax deductible holiday somewhere where they can actually be learning some awesome stuff and meeting some great people. And that's where the whole concept of entrepreneur resorts comes in, which then allows us to actually fill up our entrepreneur resorts fairly easily because we do have this big network of people. And then the most interesting thing is if you take, like in South Africa, for example, the game reserves, the actual business model of game reserves is not that great. And the reason for that is a lot of people who buy the game reserves don't buy them to necessarily make money. And they're buying them more pretty much for just having, a nice place for them to have for a holiday or as something to be able to say they have a game reserve. So the actual pricing of those game reserves don't make it easy for people to actually be able to be able to actually run it profitably. However, and even the ones that are successful, the challenge with some of them is that they are also so built into the cyclical nature of game reserves, where they're going to be much busier on the weekends than they are during the week, or they're going to be maybe full during the high season, but they're going to be fairly low during the low season. And that cyclical nature means you might have a brilliant game reserve, but you still can't get it to that high occupancy on a full year-round basis. So by us coming on board, finding a great place like Tao, which already, is very, very busy in high season, being able to actually add our own events when it's in low season, and really kind of bump up the profitability throughout the year. It just allows us to actually take two models, build them together, and make something which is far more successful. So there is this trend of more and more people traveling around the world, wanting to learn from each other, wanting to make a difference in the world. And we've really ridden that wave with these different resorts that we're actually opening. And then, of course, many of the people who are actually showing up and being at the reserve itself and learning there also become investors because they see the value in it. They're entrepreneurs themselves. And so that makes it very easy to be part of what we're seeing all around the world, which is this shift from what was, co-creating to now co-investing. And that's, I think, a huge shift that's happened. 10 years ago, people weren't even helping you create your product. Now everyone's co-creating products. People in the past weren't thinking that the customers were actually the best investors. Now more and more customers are actually your co-investors. So this is all part of this kind of merger that's happening as we as individuals realize we don't have to just be consumers. We can be helping to create the product that we want to consume. We can help to invest in the companies that we want to work with. And that's all part of the empowerment. It's what I say is like, I think I mentioned this in the past, that there was like 100 years we went through from 1900 to 2000, which was all about the capitalization of democracy. And the capitalization of democracy was taking the fact that everyone can have a vote and everyone can actually have their freedoms, and they can now actually build capitalism on top of that. And actually, as a result of that, you can end up with multi-billionaires that show up that have built this capital value out of their freedoms. We're now doing the opposite, which is going from capitalization of democracy to the democratization of capital, which is where we then take all that capital and then make it easily accessible to everybody, so then everyone can then share in it as well. And that's what's happening over these next 100 years, I believe.
That's amazing. And I mean, if you take that, you've got all these quality partners and many more, including yourselves. And then, they come on our platform and people be able to get access to it. In terms of our team, we've created a diverse team across Australia, China, America, UAE, South Africa, also in different areas between revenue and funding and technology, etc., with multiple advisors in different countries. And I think really, again, I've learned something from you. It's about balancing a team and getting really world-class advisors in different areas that can really help you learn and grow in terms of where you're going. I'm not going to repeat the track record because I think we've been through it. But when one considers where we're at, a lot of what you've spoken about, for me, makes me really excited about the potential going forward. But it's also, there's quite massive barriers to entry. It's easy to say go global. It's a lot more difficult to do it. And, we've got a lot of the track record to be able to do it. For those that are interested, you can now go to the Cedars website, and all the different things are there, from our valuations in terms of our share price, where we're going, our revenue models. You can see in terms of what we're expecting to do, both in the revenue side and the targeted share price. I'm not going to go into this in a lot of detail because it's all available. And the last thing I just wanted to share was that most people only get access to be able to invest in technology companies sort of once they IPO at the Facebook, Amazon level. Many people would have wished they had invested in an Uber and Airbnb. And really where the opportunity lies is in the growth stage. And, again, through Roger actually was the one that taught me about crowdfunding. We've now managed to partner up with Cedars, and, we've now giving people the opportunity to be able to participate on the Cedars platform. Some people ask us about our exit strategies. We've got 4 different exit strategies for investors. One is a liquidity event. So we aim to have an annual liquidity event. We're not having one this year because of the restructure, but we'll aim to have one in the fourth quarter of every year. We could look at a strategic sale in terms of a social media platform, a bank, or a REIT, anyone that wants to be closer to the customer. We are looking at a dual listing between the London Stock Exchange and what Roger spoke about with Asia and in Hong Kong. Maybe it should be Singapore based on what you said. And then the fourth one, which is a little bit out there, but possibly the tokenization of the business, down the line, and about a 5 to 7 year window period in terms of what we're looking at for the investors. And so, I'm really excited today, and everyone that's on this webinar is sort of the first people that are going to get access. But I'm basically going to put a link in your chat box. You can go to cedars.com/WealthMigrate. It's now live and people can participate. If you're from South Africa, Australia, or America, we will need to help you offline because they can't take it through the platform, but they can take it from 32 countries around the world. And so, this is quite a momentous moment for us, Roger. These guys are the biggest funders in Europe. And, quite frankly, setting up has been doing like a mini IPO. I mean, the amount of due diligence that they've done on Ken and I mean, I know you guys have been dealing with various funding rounds yourself, so you know how complex and difficult it is. But yeah, I'm really excited to say we as of today, are effectively live, and it's actually going to be live in 7 minutes, so at midday UK time, which is really quite exciting. I think for all our current shareholders as well, our wealth partners, there's 3 major reasons that people become a wealth partner. It's what we call a shareholder. And the first one is that the potential to invest in a company, like in Amazon. I tend to joke with people, but $10,000 invested pre-IPO in Amazon today is worth $12 million. So people invest, for profit. Then you've got people that want to be part of a like-minded community. So very much what you spoke about, and learning and growing together. We've got 140 amazing people around the world, and really I find the magic that happens in that group. And then the third thing, which was actually something I came up with you and the team in Bali, was our whole wealth movement and how we want to empower 1 billion people and really give access to people and allow the 99% to invest like the top 1%. I find a lot of the wealth partners want to participate because of that purposeful journey. And it's not for everybody, but for people that resonate with those 3 different reasons, now everyone can literally participate. And I would recommend that you go in and look at the wealth partner matrix. There's a number of different angles. So I want to basically finish off, Roger, and move over to your event that you actually have coming up in South Africa. Now, anyone that's not in South Africa, because we've got people from all over the world here, you do have these events all over the world, but I know your next event is in Johannesburg on the 1st and 2nd of December. The link is there. I'll put both links in the chat box as well. And anyone that uses the promo code will be able to, get a 50% discount. Just talk to us a little bit about these events. It's how I met you 7 years ago, and without blowing too much smoke up your ass, but you have had a really catalytic impact, not only on me as an entrepreneur, but on our business at large. And you share this opportunity with people around the world.
Yeah, so we're excited about coming to Johannesburg because we only actually run the Global Entrepreneur Summit in like 5 different continents, and each continent we have it in one place. So like in Europe, we run it in London, and in the Australasia area, we run it in Brisbane, and Asia, we run it in Japan. And so to be able to run the Africa one in Johannesburg is very exciting. And what I really like about it is, other than the fact that we actually bring the top 10 trends in a way that's very applicable to anyone who's an investor or anyone who's an entrepreneur, that they can actually use those trends within their business this coming year. And those trends are always the most current trends, and they're always shifting and changing based on what's going on in the market. So we've been talking a little bit about some of them, but in terms of how do you apply these and where do you go, what do you do, we include all of that in there. But in addition to actually that content, the fact that we get to meet some of the top entrepreneurs in the country who come share from the stage their experiences, and then the people that actually show up at the events, because there are always like 400 or 500 people that will come who are entrepreneurs that are all learning from each other as well, and then also sharing their stories. Like when we actually started this, which was maybe 6 years ago, obviously at that point, everyone was coming fresh, everyone was sharing. Like obviously you came along at that point before you'd launched WealthE Migrate, got inspiration about crowdfunding, already said, okay, I'm going to like really shift my model and what I'm doing and move forward. And now, you've got WealthE Migrate with this incredible success story about how you're growing at the moment, and still really at the very beginning of the whole journey. And there's many, many of those examples that we have of entrepreneurs coming and actually sharing their stories, what they've done, how they've built, like what are now, 7, 8, 9-figure businesses off the back of actually riding these waves. I think the final key thing I'll say just about this is, a lot of people think when it comes to like training or learning new things, most of us think about sinking or swimming. It's like, okay, am I going to kind of like sink with the wave? Am I going to kind of swim and like be able to stay ahead of it? The waves are so big nowadays, the trends that are coming our way, that sinking or swimming, neither of them are really the key to success anymore, right? The real key is surfing. It's like, how do you actually get to a point where you can time the wave right, get onto it with the right people, and then surf it? And if you can do that, then anyone can start from scratch, whether there's someone who's 20 years old just getting started, someone who's like 40 or 50 years old thinking that they're coming to the end of their career, and realize they can actually start from scratch and get something going, which can be really one of the big shapers for tomorrow. So that's what I'm really excited about, like actually meeting up with those who come along, and we'll be learning not just the very latest that's going on, but apply them and then become the unicorns of tomorrow.
Just in my interest, Roger, if someone was not able, the people are on this webinar from all over the world, how do they find the events for 2019?
Yeah, so if they go right now to geniusu.com, which is our platform, on geniusu.com, you'll find that on there we have got all of the events that we have for next year. So we do have events coming up in Australia, and we're going to be in America in January, February. We're going to be in Europe like in April time. So we're like next year running somewhere in the region of about 30 different events in different cities around the world. And we also have got our own city communities that already are running their own social events as well. So I may not be at those, but those are all there to really support entrepreneurs getting together, having an impact. And we have our own Impact Investor Circle, which is specifically for investors that are actually looking to make a big impact. And in fact, we're actually going to be out at Tau on our Impact Investor Retreat just before we run our Johannesburg event as well. So a lot of really exciting things coming up that people can get involved in. Go to geniusu.com and just click on the events button, and you'll see all of the events there.
Are we allowed to talk a little bit about what you shared with me on Tuesday in terms of some of the exciting things happening at GeniusU? I presume you'll be talking about it at the African Summit, but are we allowed to talk about it a little bit now or not?
Probably best to wait until then.
Fair enough. I did find it absolutely amazing. Just to give people a sneak preview, Roger's done a joint venture with someone and looked to probably triple their revenues and increase the value of their company by probably nearly 40%, if I've got my maths correct, in terms of the big picture and what is happening. If you don't mind, Roger, I know that we're pretty much on the hour. There was one question here that I just wanted to, or sorry, 4 questions. Would you mind just answering them quickly?
Sure, I can do that.
If blockchain is hacked, what does that mean for property transactions stored there? I can answer that, but do you want to give it your best shot?
Well, you can answer it first, and then I'll answer the meta question behind that.
Look, I think the bottom line is with the blockchain is that even if I log into our blockchain, you'll see that the transactions are on tens of thousands of computers, and so it actually can't be hacked because it's on six or more computers. Is one at that point it actually becomes a verifiable transaction, and so even if you hack one computer, it can't be hacked on multiple computers, and so even if there's a breach, it just gets updated in terms of the whole process, and so it really provides people with an irrefutable way to be able to show ownership without the middleman. And there's a great video that I'll, in terms of the follow-up of this event, I'll put on our WhatsApp groups around blockchain and explaining that in more detail.
Yeah, my meta answer, because yes, exactly the answer. It can't be hacked, right? But the meta answer around it is this kind of distrust we tend to have or worry we have about new technology, without realizing if we actually take the current financial system, it's already been hacked. I mean, it's been hacked by the governments, it's been hacked by the larger corporations and banks that have already basically like put up interest rates and put up barriers for our ability to be able to build wealth off it in such crazy ways. I mean, it really is a rigged system right now. So just keep that in mind, that like to actually have something which is no longer having humans in the middle of it, as to be able to kind of interfere with it and change it. I think that's one of the most exciting things that we're going to be seeing over the next decade.
Why has the West lost its edge to the East?
I wouldn't say it's a why has the West lost the edge to the East. I think it's more a matter of not that the edge is a factor of there's a factor of like who's smarter. I think it's much more around the fact that when you have got all of these different tools that are now available, it creates a level playing field. And when it creates a level playing field, and you've got a country like China with 1.3 billion people compared to a place like the US, which is like edging on 300 million. And then when you actually take the fact that 70% of the world's population sits in the East, it's just a matter of time before the East then takes over, which is exactly what happens. I think a lot of people forget that China was really the most powerful country in the world all the way up to about 200 years ago, like in all of history, right? I mean, there was no country which was actually more powerful than China, even in the times when ancient Greece was like in its heyday. It still wasn't as powerful as China, and it's really only as a result of technology that got built in the West, pretty much at the time just before the World War, with like the automobile, and then with the wars themselves, that then led basically to this kind of like superiority technologically in the West. But that's leveled out now, and as a result, just through the mass scale of people and the number of and the momentum which comes with that, that's why it's kind of just moved back to where it was originally in the first place, really.
Wonderful. Just a quick one in terms of that. I've got on the screen here, just you and your team with Suraj helped us actually build the Wealth University, put together the investor test, which is based on your wealth dynamics and the I Ching, the 8 steps to wealth micro degree. We've also put together with yourselves and the Inner Circle, the Digital Mastermind, and the Global Real Estate Mastermind. What we are doing before Christmas is that anyone that invests at the different levels, so you can see that blue, silver, and gold, they will actually get them for free in terms of participating. So just so that you are aware. My closing thought, really, from my perspective, Roger, is a question here by Daniel, and he says, so I'm just looking here quickly. Oh no, that's a private question, Daniel. I'll get back to you. My closing thought, Roger, is that as an entrepreneur, I tend to find that I'm always busy. There's always more pressing things to do, and particularly coming, this time of the year, everyone's always trying to close out and to have a holiday, and yet we're only as good as how much we expand our mind and how much we learn. How do you learn so much and continue to 10x yourself? I've known you for 7 years. I've watched you 10x as an individual. I've watched your business 10x as an individual. We obviously at Wild Migrate and our team are consistently looking to 10x. How do you do it? What's your last piece of advice for people in terms of we're coming to the end of 2018, they're going into 2019? How do they 10x themselves in their business going into 2019?
I think it comes down to one simple thing, which I'm pretty sure anyone who is a parent understands, which is you do your greatest learning whenever you have someone or some team that you are either adding value to in teaching or in mentoring or in being of value in some form from a point of view of responsibility. So like as a father, you kind of learn more from your kids than the kids learn from you. And I think what's very interesting is because I chose a pathway which includes within it that I mentor other entrepreneurs, therefore it becomes not just my interest, but actually my responsibility to always be on the cutting edge, or else I'm not going to be serving them the right way. So every day when I wake up, I'm like, oh, like what am I learning that I can pass on to other people, knowing that I actually have got someone that day I'm going to pass something on to. And so the number one best way for you to get 10 times the size you are right now is to be out there connecting to other companies and entrepreneurs and investors that you can be passing your knowledge on to, because it's just one of those rules of the universe. The more that you actually pass on to other people, the more you give, the more you get, right? And I think a lot of people forget that. We think the way to learn is to go out there and to find someone to learn from, as opposed to realizing the way to learn is, yes, go find people you can learn from, but more importantly, find people you can pass that learning onto. And then that's when you do your real learning, right? It's when you actually organize your own thoughts and share in a way that someone goes, wow, that was amazing what you just shared. And you're like, yeah, it was pretty amazing. And that's the number one key to success, I believe, is whatever you want to get, pass it on, and it will come back to you 10 times over.
Well, Roger, on that note, it's a wonderful way to finish off. Thank you very much for taking your time out in Singapore and sharing with everyone, tonight or today, whatever time zone they're in. I really, really appreciate it. I always learn a huge amount from you. I do have the thing up there for the African Entrepreneurial Summit. If you are interested, just click yes. If you're already a wealth partner or a shareholder in the company, we've actually got platinum tickets specifically for you. For the rest, we've given you the link and the promo code where Roger and his team have offered a 50% discount. I will certainly be at the event. We will be having drinks for our wealth partners on the Saturday evening. It'll be wonderful to see you there face to face. From your perspective, Roger, thank you so much for everything you've shared. And hopefully, if nothing else, you've opened up a few people's eyes and sort of awareness of what is possible. We're in late 2018, but hopefully they can really put it into action, in 2019. And to everyone that's online, thank you for joining. I know it's different time zones all over the world. Hopefully you've added, received quite a lot of value from it. And don't forget about that Seeders launch. I tend to joke with people. Sometimes you hear about that opportunity, and I've always spoken about that third shareholder in Apple, where he invested 10% and he sold out 10 weeks later for $2,300, and today it's worth over $70 billion. Sometimes when people like Roger share information, you might just want to take notice. And the good news with Seeders is that everyone can participate, even from 10 pounds basically. And so that's all from me, Roger. Thank you very much for your time. I really appreciate it.
Thanks very much, Scott. Really appreciate it too. Bye.
Cheers. Bye then.